traders, I'm Maria Stardope and this is the review of crypto analytics from FxCo. It's the 20th of December today, Tuesday, and in our today's review, we will first find out what crypto market capitulation is and how traders can predict such an event and even make profit of the situation. And then, as usual, we will discuss the fundamental background of Bitcoin, its technical picture, and we'll have a look at the chart for the moment. Let's start. We will start with an article by Katerina Kiselova and the discussion of the term crypto market capitulation. So, Katerina says that the year is coming to an end, and it's clear that last year's hopes that the decline would be just a short-term correction have not materialized. Instead, a bearish trend and several periods of capitulation have begun. In finance, the term refers to a period of aggressive selling when the last of the bulls concede defeat to become bears themselves. So what is crypto market capitulation? Suppose a cryptocurrency falls 30% overnight. The investor is left with two options. They can continue to hold or sell to realize their losses. So if most investors decide to realize their losses, the price will plummet as the bears eventually run out of coins to sell. While it's very difficult to predict and identify capitulation, there are some recurring market signals that can help traders prepare for such an event. Cryptocurrency market capitulation usually includes most of these conditions: rapid price crash, large trade volumes, oversold conditions, high volatility, a big drop in the number of large holders, and negative market fundamentals. But crypto market capitulations are not always bad for investors. On the contrary, they bring a period of maximum profit opportunity as the price bottoms out. Moreover, a crypto market capitulation tends to eliminate short-term sellers and gradually shifts the momentum to entities with long-term growth prospects, since almost everyone who was going to sell has already done so, and this is usually reflected in a steady increase in the supply of bitcoins held by addresses for more than 6 months old, called altcoins. These coins are less likely to be spent on any given day, such as statistics. Nevertheless, timing a market bottom during capitulation is extremely difficult, as the process can take months or even years, as in the case of Bitcoin in 2014-16, for example. And this is where analysis of historical data and previous market bottoms can help. Okay, now let's move on to another article by Artem Petrenko, and first, fundamental background. So Artem says that the previous trading week was the most contradictory and volatile. On the one hand, the market saw further evidence of falling inflation, and on the other hand, backed by positive CPI dynamics, investors were shocked by Fed Jerome Powell's pessimistic rhetoric, who said there were no plans to ease monetary policy or lower the key rate in the next year. And as a result, the stock market closed with a record fall since September 2022, and cryptocurrencies followed the example, and Bitcoin finally buried its chances of an upward movement. As a result, the main buying markets for Bitcoin began to sell off the cryptocurrency First, American investors, then European traders joined them and triggered the formation of a large red candle on Bitcoin's daily chart. This week also promises to be tense for crypto market as the negative background persists around the industry's biggest player, Binance. But despite all these negative factors, a new year rally is still possible, Artem says, and as cryptocurrency market maintains a close correlation with the stock market, it gives hope for a bullish trend at the end of the year. So, if we look at the chart, what do we see? At the end of last week, Bitcoin finally buried the chances of an upward movement towards 19,000-20,000 area, and it made a fourth breakout of the 18,000 level, and subsequently began to decline towards 17,400 local support level. Then Powell's negative rhetoric followed, and as a result, Bitcoin formed the largest bearish candle since November 9 and finally broke the structure of the upward trend. The cryptocurrency spent the weekend in relative calm. The price remained near the 16,700 level where its support level passes. And as for yesterday, the period of redistribution of volumes that were thrown into the market on Friday continued. As for technical metrics, they confirm further price consolidation. The RSI and MACD are moving sideways, indicating a lack of buying interest. At the same time, the stochastic has reversed in the bearish zone and may rise. At the end of yesterday, the article was written yesterday. So, in the absence of third-party factors, Artem says we should expect further downward movement of Bitcoin. The immediate target of the cryptocurrency will be the 16,000 level, and if we do not see the reaction of buyers, then the likelihood of further decline increases. So what should we expect the next couple of days? Artem says that the prospects for the upward movement of Bitcoin depend on the mood of investors in the stock market. The next 2 days will show the intentions of the crowd and accordingly form the basis for analyzing the further movement of the price of Bitcoin. Negative rumors and news are pumped around the crypto market and the level of volatility and trading volumes are falling. This is classic situation which will end with a sharp surge in volatility and further removal of the price in one of the directions. Price movements in the stock market will tell you in which direction the Bitcoin price impulse is likely to take place. In the coming days, the lull in the market will continue, followed by a sharp surge in volatility and impulse price movement. Okay, well, let's have a look at the chart for the moment. So, today, the 20th of December, and what do we see? Yes, if we look at yesterday, the volatility was quite low. Bitcoin didn't move anywhere from 16,700 something. It opened today at 16,410, and now at the moment of the publication it is trading at